All right, folks, I'm here with Eli Samido of Trading Up Podcast, which we've just finished. It went for about 45 minutes, and he's dropped an awful lot of value in there, guys. He's only 21. He's done some phenomenal things like a no-loss trading week with, how many trades was it, Eli?
About 39.
39 trades in 1 week, and that was a pretty typical week because I've seen some of the other weeks he's done, and like his journey is a fantastic little journey to go and listen to, find out how he did it. But today you're gonna get a bit of a treat, really. He's gonna walk through 3 price charts and show us how he breaks down the price chart to pick these sniper entries and get him 3-to-1 risk to reward ratio. So over to you, Eli.
All right, so guys, basically what I look for is the first thing is to find a contraction zone, which is the one in purple. Let me just take off these. Those are the trades that I took for the week. But basically, whenever I identify the contraction phase, I try to find something we call IPOs, which basically is a candle where the market, before the market does the move, it leaves a candle behind, which we take as a reference for our entries. So as you can see here, it did happen quite a lot. But before we get into it, I just wanted to kind of explain you guys the market phases that, I take in consideration. So usually market has these 2 cycles. The first one is the contraction, where the market, just the retail traders inside, there's not a lot of volume or volatility. What usually market do is it expands outside the contraction box, which is the first move, the expansion, and then it goes into a trend. The second scenario is when the market's in a contraction phase, right? Instead of doing expansion, it does something, what we call the manipulation, and then it does the contraction, and then it does the trend. And the point of this is basically people that are trading support and resistance inside a contraction phase, they're all going to get stopped out before the market gets into a trend. So the market pushes up, clear the liquidity on the upper side, and then it pushes down, clear the liquidity on the downside, meaning people that were buying and people are selling, they're both going to get stopped out. That's how, big players make money. So by doing that, they take everybody out, then they continue the trend, and, only a few traders will be able to catch that. And the same thing happens here, but, without the manipulation, it's just an expansion, taking people out here. And usually when it breaks a resistance, people use the break and retest rule. And that's why when it, starts the trend, it end up catching buyers and seller from this level and then just trend it down. And that's when you stop blowing your account and your stop losses hit. So as we know that, we just put it into place. So right now, let's start here. Usually, also I forgot to mention, whenever it expands, the trend most of the times goes below the contraction box. So by doing that, right here we had the contraction, the market expands to the downside, make sure to, to collect all the liquidities, and then it trends to the upside. So we start the cycle again, the contraction starts, it expands to the upside, clear the upper level of the liquidity, and then trends to the downside. Same thing happened here, the contraction expands to the IPO, which is the candle that, we look for, and then it trends to the downside. Same thing happened, contraction expands to the downside, and then it trends to the upside. And on my Instagram, I have my entries from this one, and from that one. So if you guys want to check it out, it should be there. That's, of course, there's a couple of more things into it, but it's kind of long to explain every step of the way and how to find the IPOs and how to really identify the contraction phase. It's kind of a long journey, but it's basically that's how I set up my trades. Also, we have one more strategy, which is the easy strategy 1.0, that we utilize 3 different indicators that gives you a extra confirmation while you implementing the system. Okay, so usually the indicators that we use for that is the Bollinger Band, which is really helpful in terms of identifying the end of a start of a reversal. So the second thing, the second setup that's in progress right now, same concept applies. We have the contraction, we have also the expansion to the upside, and then the trend to the downside. So that's how I caught it. And also you can see that my stop loss is according to the size of the box. And the size of the box, it really depends on the size of the IPO, which is the institutional candle sign to enter the market. So we take in consideration the size of that, and then we use it for entry. And then the stop loss is about 14 pips, and the take profit is about 41. So you can see the risk reward, and this is really nice. You can use a nice, pretty large lot size to enter this trade, and the reward is really valuable. So right here, 50% of the candle, that's where the market will reverse. That's why my stop loss is, my take profit is around that area. And I don't know if you guys noticed, but my take profit is below the contraction box. The same thing I explained earlier. Whenever it expands, it trends, it will cover the lower level of the box. And second trade was same thing here on the 30 minutes. We have our contraction, expansion to the upside, and then the trend to the downside. That was the last trade that I took. Actually, this is the example of the manipulation, expansion, and trend to the upside. Sorry. So yeah, those are the two patterns that I look for. You could utilize, after understanding the smart money part before implementing to the market phases, you can find other ways to make your own setup. So it's kind of like a tool to make your own trading plan. Yep, but basically those are the three setups that I was looking for. But since we are already in US 30, just to show you guys, it works in crypto market, indices, and Forex pairs. So here in US 30, same thing. We have the contraction, expansion to the upside, and trend to the downside. That's basically it.
Superb. Brilliant. Well, look, that's fantastic stuff. I've not seen it displayed like this. I've sort of seen a similar strategy in the past, but not like this and in such sort of rapid frequency of being able to get in and out on quite a regular basis. Now, do you want to let the guys know how they can best get hold of you?
Yes. So if you go on Instagram, type easy100K on Instagram. You should DM me. My assistant is always in place to answer right away. Or if you have Telegram, the same username, easy100K. Or through my website, if you go easyforex.com on contact us, it should give you a option to send us an email.
And one thing I didn't ask you on the show, and I thought I'll ask it now, is, what do you do with the rest of your day? Because your trading doesn't seem to take that long. So what sort of hobbies do you have, and what do you do?
I'm still in college. Before the coronavirus situation, I used to play a lot of soccer and a lot of basketball. So if I'm not trading, I'm into sport, or if I'm not into sport, I'm teaching, because I do classes every single Monday, Wednesday, Friday for my Cape Verdean group. They are for free because Cape Verde is in a country that it's not up there, so it's struggling a little bit. So what I do is give free classes to all my friends in Cape Verde, all the Cape Verdean people, so they can start getting to the market, because we don't really know much about this market in Cape Verde. So introducing this and giving classes, it takes most of my time.
Nice. Love it. Look, guys, hopefully you enjoyed that video. You got a few things out of it. Yeah, do go and check them out. And if you do want more videos like this, please hit the subscribe button and click the all notifications, and you're going to get more like this coming your way soon. All right. Thanks for watching.